Yeah. So what is the error in this? Is there any error?
This release of government grant, it is an it will not come under operational activities, right?
No, the question is, okay, the release of government grant impact the cash flow, it is a cash inflow.
Yeah.
Right, but that will not be there in the P&L, correct?
Yes.
So in that case, it is okay, right? Okay, profit on disposal of property. That minus 3,700, is that correct? So because this is a gain that is included in the P&L.
P&L, yeah. Now we are ready.
We are reducing
it. Yes.
Okay, fine. I'll come to the government grant part. Increase in inventories, is that correct?
Yes. Increase in inventory will increase.
Why do you think it is correct?
Increase in inventory will make cash, like increase in cash outflow, right?
More money is locked up in the inventory.
Inventory, yes.
So because that money is locked up in the inventory, you are reducing it from
reducing. Yeah.
Okay, the next item.
A decrease in receivables, like whatever the money which we need to receive, it reduced.
Okay.
So there is no inflow. Inflow of cash.
Okay. So is that correct? The 300 is correct? Decreasing trade and other receivables.
Trade and other receivables. More cash outflow.
So
it should be negative.
Okay, now decrease in receivables. What will happen when receivables come down? What happens?
We will not be receiving money from the.
You have received the money.
Yes.
So if you have received the money, cash flow in. So that negative 300 should be positive 300.
Positive 300.
Right?
Yeah.
Okay. Increase in payables.
It's a cash. Increase in payables. We are not paying money. That's why there is an increase in payables.
Increase in payables. So that 900, is that correct or not correct?
I think it should be minus 900. We are not paying any amount.
So if you are not paying,
it will increase the cash.
So that means it should be plus 900 only, right?
Plus, yes.
Correct? Right? So very simple. Increase in asset. Okay. Well, that means to that extent cash is locked up.
Yes.
To that extent my cash flow will be down.
Down, yes.
Decrease in asset, to that extent my cash flow will be up. Because my asset decreased. Let's say I've sold an asset, I sold property. That means asset decreases, and because you have sold, cash flow would have increased.
Yes.
Right. Similarly, inventories. If you have inventories, if you are having less money locked up in inventory, instead of having inventory worth 10 million, I'm having inventory only worth 5 million. That means 5 million is freed up today. That means your cash flow will increase.
Yes.
So decrease in asset, okay, means cash flow increases. Decrease in liability means cash flow reduces. For example, I'm having a accounts payable balance of 1 million, and I've paid 500,000. That means my accounts payable balance will come down by 500,000. Right? So that means that is negative. Now, if I'm not paid, I was supposed to pay 1 million, but I'm not paid. Okay. Last year was 0, and this year it is 1 million. Okay? So because this year I'm not paid, that 1 million is shown as payable. To that extent, the cash flow is higher.
Higher.
So that is why
increase in liabilities will always increase the cash flow.
Cash flow, very simple. Increase in liabilities means cash flow will increase. Decrease in asset means cash flow increase. Clear?
Yeah.
Okay, that's one very basic or fundamental concept here. Sumandra, following?
Sir.
Okay. Okay, now they're also giving some additional information. Okay.
Yes.
Now here we are going to talk about accounting basics.
Yeah.
Right? The assistant has seen that the balance of property was 39.5 million, opening balance, and closing balance is 29 million. There are no additions of property, but we know that there has been deletion.
Yes.
Okay. So out of this, you have to find out for how much the property was sold for.
Sold.
Can you tell me the number quickly? How much of the property sold for? This is accounting. Okay. Nowhere related to IFRS or ACCA. This is simple accounting.
9.6 million.
9.6 million. How?
So 39.5 million is opening balance. And we have depreciation of 4.6. So after reducing it, it comes to 34.9.
Right.
And the closing balance they've given us 29 million. So the difference is 5.9 million. And since it's at a profit, the sale is at a profit of 3.7 million. So if we add both, it comes around to 9.6 million is the value at which we sold.
Which we sold. So this is the number that will come in cash flow as investing activity.
Investing activities.
Cash flow from sale of asset. Okay, fine. Then what will be recorded as receipt of government grants?
Here I have a doubt. I'm not very sure of what that 1.4 million is relating to a revenue grant or a asset related. So if I see by this line below, 6 million is the government grant which has been booked under deferred income. So the closing balance of the the deferred income is 8 million. So I could see 2 million increase. But here there is a release of government grant to the extent of 1.4 million. So if it is a revenue grant, then the increase in the deferred income, that only we will be recording it as increase, like from the financing activity, maybe the 2 million.
Okay. No, see, what will be recorded as, that means here we have to find out how much government grant we have received this year.
Opening balance is 6 million and the closing balance is 8 million. So 2 million is the government grant we have received.
Okay. But what about that 1.4 million? Okay. What is this item? What do you think this item will be? Is this a charge to the P&L, or is it inflow of cash?
It's an inflow of cash.
If it is an inflow of cash, okay, fair enough. Then what is the other adjustment that you have to do? There has to be one more adjustment, right? Somewhere these numbers have to reconcile, correct?
Yes.
See, deferred income balance has increased or decreased?
Increased.
Increased. Okay. Now, what they have told is these numbers could be incorrect. They have not told. But we definitely know that these numbers could be incorrect. The direction could be incorrect.
Okay.
Numbers, we have to go with the numbers, but direction could be incorrect. Right? So, but this cannot be incorrect.
Okay.
Right?
So then it will be like, since 2 million increase in the asset, then it should be a cash outflow, like it's cash has been locked. So
No,
through the
increase in the asset or increase in the liability?
it's an increase in the liability.
Deferred income balance is increase in liability. So
Liability.
8 million. That means your liability has increased by 2 million.
2 million. Yes.
Okay. And now, if your liability has increased by 2 million, and we are telling the amount that you have received is only 1.4 million, liability cannot increase by 2 million, right?
Yes.
So, your liability is increased by 2 million plus 1.4 million you have taken to P&L. Okay. This 1.4, I think, should be negative. Because it was shown as a gain in the P&L. Okay. And this should be a negative item here, minus 1,400. Okay. So, what ideally, how much you would have received? Now you tell me. Basically, opening balance.
6 million.
Opening balance is how much?
6 million.
Opening is 6. Closing is 8. Okay. Taken to P&L.
1.4 million.
How much? 1.4 million.
4 million.
Okay. That means there will be something as received, right?
Yes.
That's the amount you have to calculate. So when you take this to P&L, that means the liability should come down.
Yes.
Right? This is how it will be working out. So taken to P&L means the liability balance will come down, and anything that you receive will add it up.
Yes.
So the total of these three things, okay, 4.6 plus is equal to 8.
8.
So X will be 3.4. Are we getting it? Okay. So what will be recorded as receipt of government grant?
3.8 million. Sorry, 3.4 million.
3.4 million. And this will be negative number.
Yeah.
Okay. So now tell me what should be cash flow, cash generated from operations. Now that we have addressed all this, how much should be cash generated from operations? Quickly. Someone following?
Yes, sir.
11 million.
Okay, tell me the numbers. I do not know the answer. Okay, I also have to calculate.
Yeah.
So profit from operations 3,500.
3,500.
Then Depreciation.
Depreciation 4,600.
Ah,
Release of government grant minus 14 like 1,400.
right.
And the disposal is minus 300. 3,700.
The profit, disposal profit is minus
3,700.
3,700. Then inventories
Increase in inventories minus 300.
minus 400.
Sorry, minus 300.
And decrease in receivables
300.
300.
Increase in other payables 900.
You see how what was the change? The only change I think we did was this. How can it be so very
3, 5, 4, 6, 1, 4, 3, 7 minus 3, 900. Even I've done that. For me, it is coming to 11 million.
3,500, 400, 8,000, 9,500, 10,400. I think there is some mistake in this number. This 13,400 doesn't look right here.
Yes.
Anyway, it's okay. So, okay, now basically these are the basics. Now, what are these? Okay, can we go through this question?
Mm-hmm.
2%.
Following statement is true. Intangible assets will have no impact on the cash flows as they are no physical substance. Yes. The first statement is true.
Intangible assets will have no impact on the cash flow as they have no
Physical existence.
tangible. Then how will tangible assets will have impact?
The like disposals, purchases will have impact, right?
Then intangible assets will not have impact. If I'm buying softwares, licenses, copyrights, same impact, no?
Same.
Are we getting it? Statement 2.
Right.
Statement 2 is correct. You're raising capital, correct?
Yes.
So financing activities.
Yes.
Okay.
So it will increase the cash flow.
Because you're issuing shares, right?
Yes.
Money is
Yes.
coming. Okay, so this is false, this is true.
True.
Okay. Let's discuss this also. Okay, so did we work this out by any chance?
No.
Okay, dividends paid.
The dividends paid is a cash outflow.
How much will be recorded?
dividends will be paid out of the retained earnings, right?
Correct.
So from 2011 to 2012, we could see 40 million decrease. So that 40 million may be relating to the dividends. So,
Oh my goodness. Think. Someone?
So from retained earning is increases for 40, but profit is 85. So 35 will be a dividend paid.
So basically, opening balance is 900,
hmm.
985. 985 minus 940, 35 will be the dividend paid.
Yeah.
Okay. What will be recorded in DPA's statement of cash flows under interest paid? Little tricky. So this leases knowledge is required. On the loan notes, how much interest you have paid?
5%.
Which is how much?
25, sir. 25.
25.
Yeah.
Right. But why is that balance 515? How do we arrive at that balance of 515? I think probably if you have not attended leases, you may not.
No, I
If you
have not attended, sir.
have not attended, so that's fine.
Some repayment would have been happened.
Come again.
Repayment, like
How much is the repayment? No, there is nothing like repayment here, right? Basically, you have the loan notes 500. What is the effective cost? 8%, right?
8%.
So 540,
Hmm.
right? But the coupon payment is how much?
5%.
So 25. So that is why you are having this 515.
550.
Okay. And then they are telling remaining interest relates to lease liability. That means that 20,000 relates to lease liability. Okay. So now lease liability, are they telling anything? Yes. This is there.
310 is there. That
310 is there, and then 300 is there.
300.
Okay. So then how much interest? And they're telling acquired 70th under lease payment makes annual payments under leases on 30th September each year. Okay. So what is the impact of this that we have to see? Okay. So once again, interest paid, let us come back to this. As of now, we are telling 25. Then we will see what is the impact of this leases. Here also you are paying interest. Okay.
Yes.
Then what will be recorded in DPA statement of cash flows under tax paid? That is simple.
57, sir.
How much?
57.
Tax
Tax
paid.
expenses.
Tax paid.
In
67.
67.
67.
Huh. Okay. Where should the dividend received be shown in the statement of cash flows?
Financing activities.
Dividend received.
Receipt of financing. Investing activity.
Investment activities. Okay, fine. How much should be shown within financing activities in respect of lease liabilities repaid? Lease liabilities repaid. How much is the interest? 20,000, right?
Hmm.
So that means this number should have been 310 plus 20,
20.
30, right?
Yes.
You are paid, but your number here is 300.
300.
So 330 minus 300 is 30,
30.
right? So this would have been the lease liability,
Repayment.
right? Okay, so that is the impact of that interest payment. Okay, this disposal of some land which had a remaining revaluation surplus, I think they are not, no question relating to that, which is okay. Which is okay. That is fine. Okay, so see, basically what I tried doing through this exercise is first basics, you have to like refresh about cash flow statement. We should understand how cash flow statement is prepared. Okay, there are two methods of cash flow statement, you know. What are two methods? Do we know? Okay, basically direct method and indirect method. Okay, this is discussed in IAS 7. Basically direct method and indirect method. At high level, I will explain, give a summary of what IAS 7 talks about. There are two methods. Okay, then they do not mandate which method you have to use, but generally people prefer indirect method. Indirect method is where you start with profit as per P&L. Okay, profit from profit before tax or profit net profit as per P&L. Okay, whichever line you can start off it. Then what you do is you adjust all non-cash items. Right? That is what we have seen in that in this example. You start with profit from operations and you're adjusting all to the extent possible non-cash items you are adjusting. And then working capital changes. Basically increase in inventory, decrease in payables and all those things. Okay, and this basically effectively becomes cash flow from operations. Okay, then you have investing activities, then you have financing activities, right? Okay, now this is indirect method. Why? Because you are starting indirectly with profit as per P&L. Direct method is what you do is you show receipts from customers. Okay, payment to vendors. Okay, receipts from sale of assets, etc. Okay, so this will come as cash flow from financing. These are the two things that will come to in P&L, correct? Which is relating to P&L. What are you doing? You are buying from the vendors and you are selling to the customers. And payment to vendors, payment for salaries, all expenditures, operating expenditure will come here. Payment towards salaries, payment towards rent, all those things will come here. Right? That becomes direct method. Generally, people prefer. Generally, you will see indirect method being used. Okay. Now, this is a summary of IAS 7. It talks about classification. Okay, cash flow from investing, financing, and all those things. Okay, what will go to investing, what will go to financing? That guidance is given, but a lot of clarity is also missing as far as which item should go to financing and which item should go to investing. Okay, some clarity that inherent issue is there where we are not able to identify whether something should go in operating or something should go in financing. So that is left to the judgment of the management. Okay, now one very key important thing is how do we prepare cash flow? Basically, direct method, what you do is you simply take the total of the ledger, then you can show receipts from customers. or payment to vendors. But that is very, very difficult to arrive at. Okay. That's a tedious process because now we cannot take one ledger. There are millions of ledgers, right? So how do you go about reconciling that? So rather one easier way is to go through indirect method where you start with profit as per P&L, okay, and then look at the balance sheet. What we do here is profit as per P&L. We assume that entire P&L is on cash basis. That is why we are starting with profit as per P&L. The inherent assumption is entire P&L is on cash basis. Then you adjust for the non-cash items like depreciation and all those items. Okay. And then you look at the balance sheet. You look at the balance sheet. Okay. Year on year. Okay. Period on period. You look at it. So year one, year two. Okay. Or you can say previous year, current year. So previous year debtors balance was 1,000. Current year debtor balance is 800. That means you have received cash from the customers. Change in debtors is 200. Right? That will come here as working capital change. Similarly, inventories, you have 500 here and you have 300 here. That means you have less inventory this year. Change in inventory is 200.
Can you hear him?
I can hear you, but
Okay, I think
yeah, Sarah
it's
spoke.
stuck. Yeah. Maybe we can ping, like, message him, right? That we are not able to. Yeah.
Yes, I think so. He will be sorry.
Yes.
He'll be connecting in a couple of minutes.
Have you messaged?
Yeah, I called him.
Okay, okay, fine.
How is your preparation going?
Yeah, it's going on. I was just preparing at a high level. So he told me that he'll give me some questions so that I can practice at home.
Oh,
It will be easy for you, right? You've already attended the SEMA and all.
no, SEMA is
No.
totally different.
Different, and this is different.
Yeah, it's.
I planned for SEMA first, but
Yeah.
then I thought, okay, let me just expand the portfolio. I'm already a cost accountant, so let me try for ACCA.
Yeah, it's ACCA is comparative to the cost also.
Yeah.
SEMA is very costly.
Oh. You work for a manufacturing company
I worked for manufacturing company.
before.
Now I work for woman.
Okay.
Where you are working?
I'm working in shell business operations.
Oh, Shell in Chennai.
Chennai, based in Chennai.
Okay. One of my friends working in Shell.
Oh, okay.
I don't know which operation is right.
Yeah, I'm more towards the reporting, like analysis point.
No, he is
I'm
also
not
that.
okay.
He did SEMA with me
Okay.
and recently joined the Shell 8 months back.
Oh, fine. So I'm more into this. So I thought I should move somewhat relating to accounting also. So only practical, like theoretical knowledge, what we had during studies only I had. So no experience. I'll be more into this monthly reporting stuff and all those things.
Oh, okay.
So I think this will give me a different path. So that's why I chose the ACCA.
That's a good option.
Yeah.
What is the next subject you're planning to go for after getting this?
After clearing this subject, SBL is there. So after that, I am planning to go for financial management, AFM.
Okay. So you're going to put SBR in hold.
Yeah.
Okay.
More into like I'm not interested in audit and all those stuff. So I'm not gonna take that. So mostly my role is related to that. So
okay. Hi, sir.
Hi.
Yes, okay. I think some issue we had, network issue. So where did I lose the network? Do you know, like what is it that I was discussing?
Only that data part, previous year and current year.
Okay. So basically, this point we understood, right? Like what we are trying to do is the change in the balance sheet. We are trying to reconcile through. We are adding that as working capital changes, basically.
Yes.
Okay, and one logic is also where any basically we are also applying the T account concept here. Okay, so that and trying to calculate the balancing figure. Okay, so this is about cash flow. As I said, this will be what the focus as far as your syllabus is concerned is consolidation. Okay, but for consolidation also we have to understand how the cash flow statement works. They are not going to ask you to calculate consolidated cash flow statement. Okay, that entire thing they will not ask, but some snippets. Now, what are those snippets? Okay, few things that we will try to discuss. If these are the things which I made note here. Okay. One is basically what happens in a consolidation. You are acquiring, right? You are acquiring one company by paying cash, right? If it is issue of shares, then there is no problem. But if you are paying cash, okay, as consideration, then cash flow from investing activities. Okay, what will happen is you are paying cash. So under cash flow from investing activities, what happens? You are buying another company, you are paying cash of, let's say, 100, and that other company will have a cash balance, right? So that cash balance, when you consolidate, that cash balance will come, right? So that means net you have spent only 80. Yes, someone can you be on mute?
Yes. Sorry, sir. Sorry, sir.
Yeah. Yeah. So net, what will happen is net cash is you spent 100 and you've got cash of that subsidiary, right? So the net cash that you spent is what is required to be shown under cash flow from investing activities. Okay. So you'll show how much cash has been spent and less how much cash has been acquired. This amount you will show on a net basis. Right? This is one aspect as far as consolidated cash flow. Okay, there you will show cash flow from investing activities. Then we also are looking at any cash. So these are the things that you're talking about when you're buying a company. When we are talking about consolidation, one is the first step is acquisition, right? So once acquisition is happening, then what will happen? You're paying cash to NCI, right? And this cash is what generally dividends are only paid. Right? To NCI, what you will not pay separately cash. What you'll pay is only dividends. Right? So that has to be shown separately, and that dividend is calculated as a reconciliation. Okay, we'll work out a couple of questions. Okay, on this, it will be done as a reconciliation, basically. Okay, then third is, so these are the only two things as far as consolidation is concerned. Okay, because there is nothing else that we are talking about. Okay. Yes, intercompany transactions, those will be eliminated, and from cash flow also it will be eliminated. Right? Because it is not there in P&L and balance sheet. In balance sheet, you are eliminating, right? Intercompany receivables and payables. So automatically from cash flow statement also it will get eliminated. Are we getting it? So even though we may think, okay, consolidated cash flow is a big thing, no, it is not a big thing. There are only this couple of adjustments. That's all. Okay, and in exam we are required to explain this only as to how do we show these items in certain statement like cash flow from operations, cash flow from financing. How do we show this? Okay. Then finally is cash from associates. Okay. So associate accounting, how it works? Basically,
Sir, one general doubt, sir.
yes.
Sir, this consolidation will be the first question. First question in this exam, right, sir? Is this
Yes.
will be in the part of cash flow? Will also be in the part of the question, or
They can ask anything, no?
oh, okay, sir.
Right? They can ask anything, correct?
Yes, sir. Yes, sir. Sir, and still I didn't receive the book, sir. Is there anything update on
Did you check with the border team?
Yeah, sir.
No, did you check with them?
I'll check last week, sir. They said in a couple of in 1 week, 7 days it will reach me, but yet I have not received it. And I'll check.
You follow up. Okay, let me know Tuesday, Wednesday.
Yes, sir.
If not, I will.
Yes, sir. Yes, sir.
Please be unmute now. Yeah. Okay, so associate accounting, what happens? Investment in associate. Okay, like this is how I will show. If I spent like say 1,000 rupees to acquire a shareholding of let's say 30% or 40%, then associate accounting we follow. Investment in associate is 1,000. Okay. Now how this number will change is this number will change by share of profit. Investment is 1,000. share of profit. Okay, share of profit, let's say your share of profit of that 30% is, let's say, 300. Okay, like this amount will come in the balance sheet and you will credit the P&L. This we have seen. Then less any dividend that the subsidiary that associate is paying. If let's say that dividend is 100, okay, then because you have received that money, the net is 1,200. So what will happen? This will come to P&L, and this will also come as P&L, right?
Yes.
But what will happen is generally we will not show this in P&L. We will show this as a reduction of the investment amount,
Investment.
because dividend is what? Already you are including the profit, right?
Mm.
The dividend is coming from the profit only, right?
Yes.
Right. So you will not show this in the P&L. What will happen? Bank account debit to investment account. Okay, as far as dividend is concerned. Right. So what will happen now? This share of profit now, and in the cash flow statement, okay, this share of profit has to be reduced from cash flow from operations. Agree? And you have to show this dividends received in cash flow in investing activities.
Mm.
Right. So this is the adjustment. Dividends received from associate, okay, will come in investing activities. Share of profit to be reduced from cash flow from operating activities. Clear? So these are the basically key adjustments as far as cash flow statement is concerned. Now they have given a lot of examples. You can work it out, which summarizes these things. Okay. Let me also take out one question. Okay, give me 5 minutes. I'll be back.
Yeah.
Okay, let us continue.
Yes.
Okay, so please read this. So some information is given. Basically, NCI value is given, opening and
Closing.
closing. Okay, now we have to understand how NCI value changes. Okay, so first is NCI at acquisition happens, right? So that is fair value of NCI at acquisition happens. Okay, if you have acquired during the current year, right? Otherwise, that is there, and if opening balance is also there. Right now, you can have multiple subsidiaries, or your NCI value can change also during the year. That means earlier you had 60% shareholding, now you have 70% shareholding, right? So that part is also there, and then you also have closing balance of NCI. Now, in between, what will happen is share of profit will be there,
Yes.
right? Share of profit is there, and then finally you will have
Dividends paid.
paid. This will be the only thing. Now, share of profit can be will be adjusted number, right? Because all the adjustments will go in that goodwill impairment, okay, current year profits, then share of unrealized profit, if there is anything, if it is an upstream transaction where the subsidiary is selling it to the parent company, then subsidiaries books will have unrealized profit. So that profit has to be adjusted, and that will have an impact on NCI number also. So all of that adjustment will go here in share of profit. And then you are paying dividends. And then if there is any step down acquisition, meaning to say from 70% it has now become 60%. If that be the case, then that will also come and get reflected. Right? So now this is how the reconciliation will happen. Right? And this is what they are asking: calculate the dividend paid. Right? This is the X number that which we have to understand. Right? This is what they are asking. Okay. So NCA value is given, opening balance is given, and closing balance is given. They're asking 31st of December. Okay, 690 and 780. Then profit for the period attributable to NCI. Okay, previous year profit is so much, current year profit is so much. Okay, profit attributable to the NCI. Okay, out of these two numbers, which number should we take here? $120, right?
120. Yes. Closing balance.
120. This is not closing balance. Okay. This is current year profit number. See, understand, this is not balance sheet or TB. It's just an extract information they are giving. That's all.
Okay.
Okay. That we have to understand. Now, okay. Very, very important to understand. What is the information I am reading? I'm reading the information. Information has been extracted from the consolidated financial statements. They are not telling this is trial balance. They are not telling this is balance sheet. In pockets, they have taken some information. They have taken like say statement of financial position, equity. From there they are taking. Then they are telling statement of P&L. Right. So that as I think when we practice, it will become much easier. If we practice, it will become much easier. Okay. Now, during the year, company bought a 70% shareholding in this particular company. Okay. Fair value of NCI at the acquisition date was 60,000. Right. So now this is what is happening. Already you have one subsidiary or some set of subsidiaries. The value of that is 690. Then another during the year, another 60 will get added.
Yes.
Think of it as any general ledger, basically. Already you had an opening balance, and in current year you have added some 60. Okay. Then they are telling disposed of it 60% holding in another subsidiary. Okay. In fact, okay. Actually speaking, your ACCA syllabus is quite simpler for consolidation. Okay. Multiple subsidiary consolidation is not given. Okay. Multiple subsidiaries, you have one subsidiary, one associate, but multiple subsidiary is neither there in skill level nor there in professional level. Like, for example, I can have 5 subsidiaries also, right? I can have 3 subsidiaries also, right? So that is also there. Then we have something called as cross consolidation. Where, okay, A holds, let's say, 80% of B. Okay. B holds, let's say, 60% of C, and C could hold, let's say, 20% of A. Possible?
Yes.
Right? So that cross consolidation is there. Those and all is not covered. Okay, that is the CA final. That is much more complex. Okay, chain consolidation is there where A, B, and C. Okay, we have to consolidate. All those things are there. Okay, so here we are telling that this company disposed of 60% holding in TT. That means this NCI was included in the 690.
Yes.
Right, and the fair value of TT's net assets were 35,000 and 70,000 respectively. The net assets of TT at the disposal date were 100,000. What will be the first? Let us try to understand what will be the impact of NCI on this because of this.
There will be a reduction in the ends. Sorry.
Sorry, there is some issue. Yes, I think my speakers are not working. Now it is working. Yes, what is the impact of this? This portion. How do we understand this? Treat this as an asset. NCI think that this is an like a property, plant and equipment.
Okay.
And with the knowledge of how NCI works.
If some disposal is happening, then that value will be reduced, right?
Correct.
So the portion of
so you have to calculate the what is the value of this asset at disposal.
yes.
Value of NCI at disposal, that you have to calculate. And that you will reduce from this. So think this of an asset. If they are giving some information about the asset and that asset is sold, what is the value carrying amount of that asset in the books? That you will reduce from the balance sheet. The same thing here. What is the carrying amount of NCI relating to this particular subsidiary on the date of disposal? Okay. What is the opening balance of NCI? This one.
690.
No.
Here it's
35.
35,000 is the fair value. Yes.
Fair value, okay, when you purchased, right?
Yes. Yes.
Fair value of NCI at acquisition. Basically, this is PTNCI. Okay, it was how much?
35,000.
35,000. Okay. Now we need to calculate NCI at disposal. How will you calculate? And this is for 40% NCI, right? 60% is your share. So TT's net assets
Is 70,000
at
the fair
was
value.
70,000, right? At acquisition, the net worth of the company was 70,000 net assets,
Yes.
right?
Yes.
And at the date of that means this is nothing but that net equity, right? Net reserves and surplus, all those things. So 70 and net assets of TT at the disposal date were 100,000.
100
That means the post-acquisition profit is how much?
is 30,000.
30,000. Okay, so
30 into 40%.
share of NCI in post-acquisition profit. Okay, little actually tricky only. But only when we work out these questions, we'll be able to understand. So 100 minus 70, 30.
30 into 40%.
So basically 12. That means the asset value that I am disposing. Okay,
47.
of NCI at the disposal is 47.
47.
Right? So this point also have to include NCI disposed. Okay, is
Minus 47.
and closing balance of NCI they are giving 780.
780.
All these numbers we have got. Ideally, how the format should be, the format should be first.
Opening balance.
Opening balance you can write.
Any additions?
Share of
Share of
profit.
profit.
Okay. New NCI payment. NCI disposed. Dividend paid.
Closing balance. Okay.
Yeah. So this will be a balancing figure. So which will be 823 minus 780, which is 823 minus 780, which is 40. Getting it? So good understanding of NCI is important to work out these questions. Right? There is actually no knowledge of cash flow required. Right? But no, this becomes dividend paid to NCI. Okay, this becomes a cash flow item.
Yes.
Now the question is, will this dividend paid to NCI, will it come in investing activity or financing activity?
Dividend paid.
They're not asking you, but this is my question. Where will this come? Dividend paid to NCI, will it come in
Investing activity.
investing activity? But dividend paid. Confusing, right?
Yes.
Okay, standard doesn't give answer to this. Okay, so I have also checked. Okay, there is no right or wrong answer here. You can ideally, yes, is this part of investment? Yes, but NCI is part of your equity.
Yes. Then
So
it will become as a financing activity.
Right. So there is no answer to this actually. Okay. So did we understand this working? I know it is complicated, but yes, if we practice a couple of questions, there are a lot of questions in your materials. If you practice a few, then it will definitely be easier, not a big deal.
Okay.
Okay, so other things are similar. Basically, how cash flow is prepared. Okay, where we had actually seen three things, right? NCI, acquisition. This is straightforward. Associates also we have seen. So you can work out the other questions in the cash flow statement, and if there is any doubt, you can let me
In exams, the question will be only like this, right? Where they will give a portion of it and then they will ask to calculate whether it is impacted. It's
know.
like that. Or it will ask like a full-fledged one.
No, like this only. No, for this you'll not get 25 marks.
Yeah, I know.
Even 4
Five,
marks,
yeah,
4
5
marks,
marks.
4 marks, something like that.
Yeah.
Okay. So like this, there will be part of 3-4 questions.
Questions, yeah.
Yeah.
Hmm.
That is how it will be.
Okay.
Okay. Can we move on further?
Yes.
Okay. So this is about cash flow. Then the next part is foreign currency financial statements. Again, consolidation. As far as pure consolidation is concerned, that is over. Okay. Now, if I am having a subsidiary, okay, which is preparing its financials in a different currency, obviously, right? So let's say Infosys. Now, Infosys has a presence across more than 50 countries, right? And they have subsidiaries, let's say, in London. So that subsidiary will prepare in GBP, right? So, but that is a subsidiary. I have to consolidate. Now, I am based in Bangalore. I prepare in INR. I report to SEBI in INR. I publish my financials in INR, right? So, what do we do with the subsidiary? So first we have to consolidate, right? Because it is a subsidiary.
Yes.
But they are in different currency. We are in different currency. So what should we do?
We'll convert that into our reporting currency.
Reporting currency. Their reporting currency is GBP, no?
No, to our reporting currency when we are reporting, consolidating it.
1 second.
Yeah.
Basically, so I was telling they are preparing in GBP. So you are telling from GBP we have to convert to INR, correct?
Yes.
Okay. Now let us see how do we do this conversion. So this is your subsidiary's balance sheet. Okay.
Yeah.
Which is in GBP.
Hmm.
Okay. Or let's say in some currency, and you have to convert into some other currency. Let's say USD. Okay. So let's say what is the rate? 1 GBP is equal to 1 USD is equal to 0.8 GBP. That is the rate, right? 80 and 100 GBP USD. What is the rate today? 1.26, which is correct. Is equal to 1 divided by 0.8. Yes, 1.25. Correct. So 1 GBP is equal to 0.8 USD. That is a conversion. 1 GBP is equal to 0.8. Sorry. 1 GBP is equal to 1.25 USD. Okay. Or 1 USD is equal to 0.8 GBP. Okay. So now this is a GBP financials, let's say. So you have to convert it to USD. How will you convert it? Let's say this balance sheet is as of 31st of December 22. Rate is given. How do we convert? Yes.
Closing rate will be considered for conversion, sir. The end of 31st December 2022, what was the exchange rate that is being used for this conversion?
So you will use this 0.8 GBP to convert.
Yes, sir.
Right? Okay.
Yeah.
Now let's say on 31st of December 2021, assuming we did not do any business. Okay. Assuming no changes. Okay. Or even if, let's say, you can say there is minute changes. Okay. You cash increase by 800 and equity increase by 1,500. Okay. At that time, one USD is equal to, let's say, 0.75 GBP. Okay. Now, at that time, if you had converted, the numbers would have been something different.
Yes.
And now the numbers are something different for the same local currency.
Yes.
Right? So last year, what did you do? You converted this 500 at 0.75 GBP, right? Divided by 0.75. We are converting in USD. Right? Now the same 500 you are converting at is equal to 500 divided by 0.8, 625. Right? So that means there will be a difference.
Yes. This is the foreign exchange gain or loss we will get.
So that loss, where will you show?
P&L.
Okay.
No,
But
when it is monetary, like when it belongs to the fixed assets and all those things.
No. So there is a difference. I think somewhere you have read this. Then we first look at monetary and non-monetary items.
Non-monetary assets.
Okay, that is no more there now. Okay, everything is converted at closing rate.
Yes.
Okay, everything is converted at closing rate, and there is one thing. Point one, balance sheet. Everything is converted at closing rate. Now you have P&L also, right?
Yes.
So how do I convert P&L? How do I convert P&L? P&L
maybe on the transaction date.
Basically, average rate only. Okay, transaction rate is very difficult to identify.
Yeah.
Right. So we use average rate. Okay. So transaction rate is there, average rate is there. Okay. So we use average rate for P&L. So what happens? The P&L that you do is at average rate. That means the number this number is coming at a different average rates.
Yes.
Right. And these numbers are at different rates. So obviously there will be a difference.
Yes.
Right. So the difference is basically called as foreign currency translation reserve.
Yes.
The balance sheet will not match, right? So that difference will be shown as FCTR, foreign currency translation reserve. Whether gain or loss, you will put it under other components. OCI. Other components of equity. Okay.
If it is a P&L related gain or loss, that also we will capture in
So
P&L.
P&L related gain or loss, where is the question of P&L related gain or loss? When will P&L gain or loss will come? When we are talking about the transaction. So if you remember,
Yeah.
we earlier studied IAS 21. This is also
Yes.
part of IAS 21.
Yes.
Okay, this is also part of IAS 21. When we earlier studied IAS 21, we talked about particular transactions.
Transactions, yeah.
So you are here in India, you are doing transactions in Singapore dollar, US dollar, and all those things. Those transactions, that is real P&L loss. Not real. You are not selling the subsidiary today.
Yes.
Okay, so this first thing is balance sheet converting foreign currency financial statements of a subsidiary.
Okay.
Then what are the consolidation issues?
Hmm.
Okay, the consolidation issues basically, this is one consolidation issue. That's all.
Okay. Okay.
Okay, so everything you will calculate, you will convert the foreign currency financials to your rate, then you will consolidate. Then you will consolidate. For example, I will convert this entire thing into USD. So let's say if there is some difference, the difference will come here. Okay, here I did not make it different. FCTR some number will come. Now you will consolidate, take this to your USD financials. Okay. No, you will not take share capital, obviously, because subsidiary, right? You will take
Yes.
only the assets, then
Other
you will have
assets.
goodwill and all those things. So,
Yes.
I mean, more or less, this is how it will work.
Okay.
So, one few things they are talking about is, okay, mainly this change in rate. The other thing is they're talking about is goodwill. Okay, so goodwill calculation, what will happen? Because from here, you don't have goodwill in the individual financials, correct? You will have it, you will show it in the consolidated financials, right? So one, like where the issues come, okay, the issues come basically you will calculate the goodwill in the local currency. Okay, you will calculate the goodwill in the local currency. Then if there is, and that will be converted, goodwill will be converted at the closing rate only, that the opening rate or the closing rate. Okay, then there is impairment losses there.
Yeah.
That impairment loss will be in the average,
Hmm.
right? Because you will take it through the P&L that you are converting at the average rate. So,
Yes.
so that point also has to be that will also give a
Impact.
difference. That will also give a difference. So again, that will also be
Part
going
of
to
the
SBR as
FCTR.
part of other
OCA.
components. So you will calculate the exchange gain or loss, okay, as a balancing figure in that case, basically. Okay, so as far as foreign currency, that's all. I mean, there's nothing. They're giving big questions. Okay, a simple conversion and all. Okay, the summary is okay. Change P&L using average rate. Change balance sheet using
Closing rate.
earlier we had the difference of monetary and non-monetary.
Monetary.
That has been okay removed. Okay, where what we will say is inventory and all I will translate at the closing rate. PP and all I will translate at historical rate.
Yes.
Okay. So like those that will also cause a difference. Now we are not having those classifications now. Okay, so that is all. Like so, these two chapters are small chapters. Obviously, you'll have to work it out some questions. Okay, foreign currency. So let us see if we can work out one question here. Do we want to work this out? Yes, we can do this. It's a good question actually. So I think their exchange rates are as of 31st October. So first we have to calculate goodwill in the local currency, right?
Yes.
Yes, goodwill calculation.
First, we'll arrive at the fair value of the consideration.
How much is the fair value of consideration?
It is not that.
Yes, how much is fair value of consideration? What happened? Basically, fair value of consideration. Where do we get that number here? Investment amount, right? This one.
Yes.
46
Yes.
into 8.
On the date of acquisition.
Yes.
Okay.
So fair value of consideration is equal to 46 into 8. Right? Then fair value of NCI, is it given?
They've given that the NCA portion is being sold for a quoted price of 2.68.
The quoted share price was 2.62 per
Yes.
share. Okay.
Sure.
So 2.62 will come into how many shares?
Total share value is 210, but 40% is NCA. So 210 into 40%.
No.
No.
Number of shares you have to find out, right?
I didn't get it.
No. Number of shares you have to find out, right?
Yeah.
How many are the number of shares? Do we have that information?
No. They've given only 250 equity shares, $1 each. Okay, then I need to convert this into dinars.
No, this is already there in 210, no?
Yes.
So how many, what are the financials?
They're mentioning $1 each.
$1 each.
But we are reporting in dinars, right?
This is a dinar.
Then it's
So we can assume that it is 1 dinar. So 210 million shares, right?
Okay.
So 210 million shares into how many percent?
40%.
Okay. Then share value of consideration less share value of net assets. How much?
On the precision statement. 70 million dinars. 70. Uh, 70 plus.
So how much is the net assets?
390.
No, 258.
258 is retained plus the
210. Equity shares. This is retained earnings. No.
yes.
So 210 plus 258, which is okay.
468.
210, 258.
Plus revaluation 20 million.
70 minus 50, right? Because this 50 is already included in this 258.
Yes.
Okay. So, right. So goodwill.
100 million.
Goodwill on acquisition is roughly around 100 million. And what they're telling, impairment was reviewed. Goodwill is by 20%. Right? Impairment. When was this done? On 31st. On the closing. Okay. But this has to be converted at average rate only.
Average rate.
Okay. So this
Into 20%.
Okay. So the value of goodwill arising on the acquisition of Chrysler that should be reported. Financial position as of 31st October. Okay. So now this is basically the goodwill value. Goodwill on reporting date. Now you have to convert this. Right? Opening goodwill.
Closing.
Because it was acquired in this year only, no? Now how do we calculate this? Goodwill on acquisition, what was the exchange rate?
8.
8. Okay, so this is all dinar and this is what?
Dollar.
8. Impairment will be?
Average rate, that 8.5.
5. Okay. And the closing rate is what?
9.5.
Okay. So opening 100. Okay. Impairment will be okay, and closing will be this.
Hmm.
Right. So this is what this is goodwill opening.
Hmm.
This will be exchange
Exchange rate difference.
difference. Here I think it is loss.
Hmm.
Yeah. Why? Because this is 10.15,
10.42.
10.42. So
2 million.
this minus this.
Hmm.
Right? Are we getting this? So this will go as this. This two will go to PNL. This will go to PNL. This will go to FCTR or OCI.
OCI.
Right? Are we getting this?
Okay.
Then, as part of your answer, you should also calculate the balance on the group translation reserve. Now, this is something that you can do by yourself. Okay. Basically, you have to convert this to dinars into dollar and see what's the difference.
It
Okay.
will be calculated only based on the reporting date, right?
Yes, 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 yes.
Okay.
But understand, you have to calculate the PNL also. 292 minus 250. That PNL you will calculate at
In the average rate.
Ah.
My question is only on the acquisition date. Some different rate is there. Are we concerned about like because we are doing it for goodwill, right? Are we gonna do anything regarding that to other assets also?
No,
No, right?
no.
Okay.
Because consolidation for the reporting date only.
Yeah.
Okay, and you see here, explain why this arises. This arises because of change. No. This
Change in
arises
the exchange
because
rate.
of change in different
Exchange rate.
different rates, mainly goodwill, then
Impairments
uh,
and the PNL related items.
okay. So you can go through the other questions. Okay, similar ones only. But what is more important is this part. They are giving 10 marks. What we did, you will get only 7 marks. Okay, this is 10 marks, basically. Okay, so I think we can close here. Any doubts before I close?